out of the top of my head, a few of the topics that I thought that we could somehow touch upon, Micah, is first of all is like overall, how would you look at profitability from a banking perspective? I have some ideas, but I'd love to pick your brain on that as well. And then later on, dive into like the different elements, because in my mind there are like three major elements that determine profitability from a banking perspective. And then let's dive into all of these three elements.
Yeah, no, absolutely, and that makes complete sense. And so when we start, once again, very broad and very macro about profitability at banks, ultimately we're looking at understanding what products are the most profitable, and beyond that, what customers are the most profitable, and then the profile of what makes a profitable customer so that you can look at the ability to do things like cross sell, grow internal business, but then also target the right customers, design the right products to meet those customer needs. And then, even beyond that, for more of the larger institutions, understanding what relationship managers and personal bankers and even private bankers are the most profitable with their book of business. And so you can take the insights of understanding when you identify who those are, understanding how they built a profitable customer base, how they cross sell their products, and then allow them to train the rest of their peers to be more successful.
Yeah. So what I hear you're saying is that the objective at the end of the day is trying to measure performance, and performance can be measured on a multiple number of dimensions, just like you were saying.
Yeah, and that is critical. It's not wanting to look at just how profitable a bank is. You can look at the 10Ks, the Qs, and all of those financial reports. It's truly understanding the ways banks are profitable, and you can be profitable across multiple dimensions. Another one that you can look at also is channel. Is the digital banking channel more profitable, less profitable than the old model of the brick and mortar and all of the stores? Now, most people are going to tell you immediately that, of course, digital banking is going to be more profitable, but you need to understand why. Because the last thing you want to do is get rid of and abandon your old model of, well, we have a branch and that's going to attract customers and they're going to come in by closing that branch without truly understanding how that's going to impact the other dimensions of your profitability.
Now, interestingly enough, you guys in the US, you have a lot more branch banking going on than we have in Europe, and especially here in the Netherlands. But I don't think your banks are less profitable than ours. So it's not necessarily so that it works.
Yeah, and but you do find, like everybody else, when they're reassessing the plan for the future, branch rationalization, i.e., understanding where you need physical branches versus what you can replace with ATMs or various different models. I don't know, because I'm sure you guys don't get the same commercials from the banks on the European side as they do in America. But we have one large bank that did a commercial years back where when you walk in, you go up to a touchpad, and instead of having a physical teller in the spot, you're talking to somebody remotely through a screen.
Oh yeah.
So and it's kind of that hybrid model of where it's actually a digital banking channel, but still you come into a physical location to actually start that
Interesting.
communication, because it's a balance between, hey, I want to talk to somebody. Because as a customer, you got to think about that as well too, in the customer experience in all of this, because there are definitely people who don't want to come into a traditional store. There's a wave of people who, and then understanding how to maximize and what makes your digital channel profitable, and what activities you can maximize that profitability versus understanding where you still need the ability to provide the people in the branch, and then the cost of that and where they sit, and how you can optimize locations to reach your best customers, because the last thing you want to do is ruin a customer experience, because I think that's the one thing that banks do find. And once again, the customer base, if they start having bad experiences with all of their options for banks in the United States, they will take their account and
Yeah. Yeah.